Welcome back to the Capital Mindset Show, everyone. I want to welcome you guys to the show where we're going to talk about a portfolio update as well as some news that's actually going around that I kind of want to just cover too. So the first bit of news I want to cover is actually FTX is actually looking to close a deal to buy BlockFi for about $25 million. So if you were, an investor in BlockFi, it's a private, by the way, but if you were an investor, if you owned it, this is how you get wiped out, right? So it looks like FTX is kind of coming in here and saying, we know you're struggling. We know you have all these issues. We'll offer you this, so take it or leave it, right? So FTX has been doing this quite often. I also want to highlight, if you're kind of going like, who is FTX? What is FTX? Well, FTX has this relationship, not relationship, it is this company, Alameda Research. They're almost like one and the same here. So if you actually go to their website, you can kind of figure out, you can find the paper trail. It's not like they're hiding it, but just keep an eye. And also one thing, we did talk about this actually when we were looking at Voyager Digital. So Voyager Digital actually received funding from Alameda Research to kind of prop them up. And so this is kind of all interrelated. And the CEO of FTX actually owns a significant stake in Robinhood. So keep that in mind too. So I wouldn't be surprised if we actually find out later that, maybe Robinhood's going to be acquired. Maybe, I have no idea. So there were some rumors that FTX actually was going to, post a bit, but it's just rumors. Nothing actually confirmed for now, so I wouldn't really include it here in this news segment. And then on to some other bit of news. I just want to also highlight for you guys that we have this news here from CNBC saying, oh yeah, look, natural gas is dropping about 16%, post worst month in more than 3 years, right? So this is kind of going to show you that, yeah, when the news is kind of really talking about it, it's a bit too late because, you have a lot of hosts. I guess you can call them entertainment hosts more than journalists than anything, but a lot of hosts on there, let's say Jim Cramer, for example, who's saying you should be buying oil, adding oil, purchasing oil, stuff like that. So, what's going on? Well, if you guys remember that I held ConocoPhillips, and I'll actually show the position, not the position. We'll get to the positions in just a second, but ConocoPhillips here, the stock is trading at about $89.81. The market's actually closed now because we're filming it just after the market closed. And, the stock is no longer in my portfolio. You can actually go back check all the videos, me sharing my thoughts regarding, okay, well, what's going on? Why do I think I'm going to be selling? Why am I selling? And, kind of see that progression over time. You can reference the content library if you so wish, or just go on YouTube and you can find the video too. Either way, whichever works best for you, you decide. Okay, so with ConocoPhillips, I don't own it anymore. It is actually much lower than when we sold, so I'm very happy in that. Hindsight is looking really good thus far. Not to pat myself out on the back there, but it looks good. So my opinions at the time, to kind of rehash them, is that we were much more closer to a top than a bottom, and that we had to remember that the consumer can in fact reject higher prices, and that we have to remember that higher prices can't just go on forever unless the consumers accept it, okay? Well, there is kind of on a relative and an isolation basis, when you get into bigger entities, as in structures, economic structures, it gets a little more convoluted. The topic is more complex than just simply saying one thing or another is true. But, taking a step back there, I do think that we're going to see, for example, what Michael Burry has been talking about, which I'll actually pull up his stuff right now and show you that. So, Michael Burry's actually been saying this now more recently. Now, I'm not going to sit here and say that, okay, I said this and he wasn't thinking this. But on the channel, we've been talking about how this is actually more than likely going to be the thing. And Michael Burry's probably just making his adjustments now, because he was talking about more prices going up before, and now he's making his adjustments because I think he's seeing similar data. So I think that, United States is actually going to enter into that exact time frame. If you look at inventory data was showing us for a while now that, inventory was stacking up, and then that actually leads to what Michael Burry is actually talking about with the actual effects that causes, perhaps a Christmas in July, so to speak. Because, we looked at Target. What did they say? Well, Target's reports were showing that, we have a lot of inventory. Walmart, similar story. Across the board, this is kind of happening. But one other thing is that when you kind of break it down in terms of what the market as a whole was pricing, or the bond market was pricing in as a whole, is not this massive amount of money creation, money inflation. It's actually sort of tightening monetary conditions, and something that Jeff Snyder's been talking about for quite some time. So if I reference, and I'm very proud that a lot of the members of the community have been actually absorbing a lot of Jeff Snyder's work. So I hope to continue the trend to say the word Snyder pilled. And Jeff, if you ever see this video, just know you're always welcome to come on the show. And Snyder pilled, that comes from this channel here. So Snyder pilled, right? Just bringing your content, making it a little bit more digestible for the younger audience, I guess. So all in all, I do think that, Michael Burry is correct in this particular case, and I agree with that, but it's something that we've been holding true here for quite some time. So just kind of breaking down, well, why might that be the case? Well, remember that we've been talking about in other instances, like if you have discretionary spending comparing against necessities, right? So necessities can be food, housing, and energy. If those keep rising and that discretionary spending, which one are you going to choose? You're going to choose your necessities. You have to spend on necessities. You can make that sacrifice and not actually buy those, maybe that watch or whatever, that luxury item, that new car. Maybe you don't buy that, but you have to buy, or you have to pay for your housing. You have to pay for your energy. You have to pay for food because you have to live. So all in all, you kind of take that into consideration. It kind of makes more sense as to why you actually might see some slowing inflation, deflationary. And when we say deflationary, I want to use the word more contractionary. Let's use that word, because I think then a lot of people can get behind that, because I understand that in the modern sense, a lot of retail investors think inflation, rising prices. Rising prices can still occur with a contraction of sorts in the monetary system or in the monetary base. But that being said, prices are more than likely going to kind of suffer, but that's not a good scenario. Let me just kind of be clear that it's not really a good scenario. And I've talked about this in the past in other live streams or other videos that, in a scenario where I'm selling oil stocks because I think oil is kind of more closer to the top than a bottom, is because that's not a good scenario if oil kind of collapses. If you remember 2008, that recession, we saw a spike in oil followed by a subsequent drop. Now, of course, I want to highlight, and this kind of goes into this, I've seen a lot of people kind of make very valid points in terms of how oil, well, we have to compare the demand side versus the supply side, the capex that's actually going into the oil industry, and that it's not sufficient, it's not enough. And that's what some people are pointing out. And that's a valid argument. That is a very valid argument. I'm not going to take away from that. But one thing I kind of want to highlight is that, some other things that retail investors will say is, well, look at ConocoPhillips. It's cheap at a 9.21. So they're like, oh, it's a 9.21, cheap relative to the markets, trading at a discount. Well, be a little bit more cautious on that at first glance. I know that Jim Cramer says, no, I'm kidding. I'm just joking. I'm just, having some fun there. But all in all, like you want to pay attention to, or you need to do further analysis on that commodity, because this is a commodity-based company. So in some ways you could argue, from the technical definition of what a derivative is, this is not a derivative, but from what a derivative is in the spirit of a derivative, ConocoPhillips embodies that in a huge degree, because the value of ConocoPhillips is derived from the price of oil, plus their operations and efficiencies. Okay, so it's not just oil, but plus operations and efficiencies, but it is still derived from oil primarily. Okay, so something that the professor at NYU, the Dean of Valuation, has stated in one of his oldest videos discussing ExxonMobil, right? He said that his valuation on ExxonMobil was incorrect. Well, why was he incorrect? Well, as he stated himself, humbly so, and I got to give him credit with that, that he said, well, my evaluation missed out on one key thing. And this is something you want to think about when you're creating your own evaluations. Well, I missed out because I did not value the future price of oil correctly. And ExxonMobil, I was valuing it on the current price of oil. And so after understanding that, he was like, all right, so looking back, I was incorrect to do that, right? So that's kind of what you have to think about in terms of these kinds of companies. Now, going over to the portfolio, I want to show you guys this one right here. And I do see that there are actually a decent amount of you actually watching the portfolio live. All right, so I'm glad that you guys are enjoying it. Just remember, this portfolio cannot be used for buy and sell large trades. That's not what Capital Mindset wants to promote or even offer in any capacity. So if you want that, you must have to find some other service. I'm not the one for you. I have no desire to do that. Right? This YouTube channel is just to document my thoughts and just to share it. And if you guys are passionate, you guys like what I have to say, you guys want to listen, great. You don't want to listen, great too. Don't worry about it. So all in all, looks really good in terms of like how I've been feeling about the markets. Again, like I know that some of you actually were commenting, and we were having discussions about this, that in older videos you've noticed where other creators were kind of saying this market's garbage, blah, blah, blah. I'm kind of like, this is not even that bad of a market. just so everyone understands, in the future, I'm actually going to be using a third-party service. So the next portfolio update will be actually using a third-party service because I kind of used like a lot of duct tape and faith to kind of wield this together, and so that the brokerages update, because it would be actual pain in the butt to manually update all the time. So, but I want to use a third-party service that actually does it automatically for me, and so it makes it really easy for me on that end, and it still allows me to actually hide dollar amounts because I can keep my privacy, and just gives you allocation, transactions, and dates of transactions. Of course, I'm not going to be providing the transaction dates because, again, that would be then promotional of like buying sellers. But no, so just keeping that in mind. It's just going to show portfolio allocation and historical performance, which is going to be something that's not shown here. This shows weighted gain and only unrealized gain. So as soon as I sell, it actually lowers the weighted gain. So when I sold ConocoPhillips, it lowered the weighted gain, etc. You get the point. So that's going to show that. It never really mattered to me in the first place because I'm not, trying to like upsell anything. So it's like, all right. Really, this is more so, again, for coverage, vlogging, etc. But really going down the list on my thought process, because, again, this is what this video is for. What I basically have been doing is I bought more Meta, nibbled on some GPN, but Meta, we actually were able to acquire it at really good support levels around 155. And so we actually gulped. By the way, if you're new to the channel, there's 3 comedic categories of purchasing. There's nibble, bite, and gulp. And and before I get to the rest of the portfolio, I do want to cover, for those of you who do not understand, and I don't want to be like offensive or anything like that, but if you don't understand what the tabs at the bottom means, I'll kind of explain that. So right now, the past investments is a it's kind of like a temporary remedy for this newer service. Is going to be better for me to showcase that in terms of like transactions, but it's kind of supposed to remedy that and supposed to logging them and providing the video, if there is one, of me talking about it. All right, so because I also want to document the thoughts and kind of have those listed out for the record on the dates that I sold. Because when I do an action, I document it on the day of. So, or for the most part, I want to say like there's probably like a couple that are not. But YouTube index is also this one right here, and I'll actually pull this up for you guys. And so this is not to be copied whatsoever. I actually left a warning, but I'll say it verbally here. Do not copy it at all. Don't copy even the main one, by the way. That should be said, immediately. Don't copy the main one. I mean, it's going to be useless to you. It's not something that can really be copied. Again, that's not a service provided here. You can just look at it like at its design, and the idea is you can kind of say, okay, what are his thought process? What do I like? What do I dislike? Throw what you dislike. Accept what you like, and then cool. If it affects you positively, great. So this is the YouTube stock index. This is not my portfolio, if you really thought that. I'm sorry for you, but this is the YouTube stock index that was created. I forget when it was created, but there's a video of me creating it and then talking about it. And if you see a stock in here, basically how you get into this portfolio is you basically actually have to be talked a lot about on YouTube. It's not necessarily that you're a bad company. There's, how correlation doesn't prove causation for you statistics nerds out there? Well, if correlation doesn't prove causation, bad company entered in here doesn't necessarily mean it's a bad company. It just means it's talked about a lot on YouTube. That's it. That's the criteria. You might notice that there are some stocks that are missing from here. And yes, I would maybe add them over time. I have to figure out the strategy of how I'd add them and kind of keep these allocations weird stuff. But I'll figure it out. The point is to keep track of all those stocks that were talked about at the time. Presently, it is down 18.78% in this strategy, which I'll show right there. You can see it at the top. And then the other strategy is actually down 20.85%. So the one that's actually performing better is the one that has more Tesla in it. Therefore, Tesla's a buy. Just kidding. All right, so all on that, I kind of want to go back to the holdings and kind of go down the list. So Netflix I added more to. Unum, nothing. Really nothing until Leggett and Platt. Added a little, nibbled on that one. Nothing the rest all the way through. Warner Brothers Discovery, almost doubled the position. I did almost double the position actually today. So got a nice price for them. And I think that I'm still waiting on the numbers to consolidate. You can see it's still a very small part of the portfolio, but that is actually, after nearly doubling it, more cash is kind of flowing into the portfolio. You remember that I still have my good cash reserve, so I can still really deploy that. You guys asked in previous live streams, but if you guys ask another subscriber, they'll answer it. So anyways, with Magna International, that one, I nibbled on that one just a tad little bit, just very small amount. And it's literally like nothing. I shouldn't even mention it because basically I didn't even add if we really consider it. Bank of America, though, I did add to that one. And ConocoPhillips, Rio Tinto, and BHP, those are all kind of leaving the portfolio. That's been old news for this channel for quite some time. There's older videos addressing my thought process as to why, and as well as kind of over time, you've been seeing the portfolio updates. Their sizing has been coming down and down and down as I take off the profits. Now, the one that's performed the worst of those three has been Rio Tinto. Rio Tinto did not perform as well as BHP. BHP performed really well, performed insanely well over the short duration that it was really weighted in the portfolio. ConocoPhillips, extraordinarily happy. We nearly experienced 300% returns there. And so, again, hindsight's really good that we actually did sell when we did. So looking over here to the speculative side, it's absolutely getting your cheeks clapped here, except for the largest holding here is actually doing really well. It was doing better, but it's still doing pretty well. And the ones here, the strategy shift here is actually with OSTK. I'm not really going to be adding more to that one. Of course, there's a price where I'd add more, but I'm not really planning on it. I'm looking at other opportunities. That's basically why. It's not that I hate it or anything like that. And you got to keep in mind, this is the speculative side. So the priorities are different. My priorities are obviously not speculative stocks. They serve a purpose. I do like them, but under the understanding that there's a lot of speculation behind them from my end, and it could be because I don't understand key parts of the business enough for me to make it a core holding or anything like that. Another company that could end up here is like Crocs, for example, because I don't understand retail consumer trends very much, like fashion trends. Don't understand that. Like I don't understand the appeal of Crocs, but I kind of see how it is cheap. And then my only concerns with Crocs was, how are the forward projections going to be, or how are the forward earnings going to be? That's really my concern with Crocs, and I can't really pencil that out. So it would go here. Not saying that it will. Some of the old stocks, you might remember that, like Foot Locker, we bought it when it collapsed, and then we traded that by accident because typically we don't trade. But it was for fun. And yeah, you might see some of the fun stocks. I have some fun stocks in here. I deserve to have some fun stocks. Yeah, and those I'm not going to give you, there's no thesis behind them. They're just fun. And I'm not really going to cover too much of the thesis on the speculative stocks out of responsibility. I just want to cover one of the fun stocks that I purchased a single share of, and that's Rick. And that's because a lot of you were asking me to do so. And so I was like, all right, and I promised you I would. So then I did. So there you go. Rick is now part of the holdings, boys. And you guys can look up what that is on your own time. I won't really say on this video what that company is. I mean, yeah, have fun with that. And yeah, the VIEs are doing actually really well. And actually, if you remember in the YouTube index, the ones that are actually doing the best are the VIEs. And for those of you who don't know my opinions on VIEs, there's plenty of content on the channel about VIEs. So I would say you can feel free to check it out. You don't have to if you don't want to. I won't be hurt. I won't be offended. But if you want to, check out the videos. And I have a lot of them, and you can kind of gauge my thoughts on them. You don't have to agree with them. You might think it's full of it. You don't have to watch all of them. You might watch just sprinkle in here and there. But I have it documented, my actual thoughts on the VIEs. And so if you think I'm bullish on them, I don't know what to tell you. Because I did receive comments in the past like, oh, you're bullish on Chinese VIEs. And then I'm just like, you do know what this channel has been talking about the whole time? But anyways, and I have a lot of subscribers who are very bullish on them, and there's nothing wrong with that. I understand. That's the beauty of a market, right? The beauty of a market is we all are going to have differing opinions, and it's all okay. All right, with that being said, just please remember to check out our sponsor for today, the SEC, the Securities and Exchange Commission, as well as the IRS. Link in the description below. And as well as, please remember to also check out the co-sponsor with the SEC, being Voyager Digital, where you can make 9% interest rate returns at no risk at all, right? No risk at all. And it's right there. And I heard that Voyager Digital is actually coming out with an electric vehicle. I've been trying to say that in the past videos, but I'll give it a secret to you guys. They're coming out with an electric vehicle, and then after that, there's going to be a robot, right? And then if you have the NFTs, you can redeem them for robots, and then the robots actually can cook for you, but the robots only cook vegan food, so you can eat vegan food while in your cryptocurrency electric vehicle funded by your NFTs that are all staked in this massive ecosystem, and you're earning 9%, becoming rich overnight. So with that being said, see ya.